Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can keep finding my blogs on gregschnell.com as well as StockCharts.com. So we've got a bull market running, that's for sure. Dow breaking through 30,000 to close out Tuesday. So lots of things working. Today I'm going to cover off the miners of industrial metals, and the reason I want to cover that off is because of the big trend in copper that we're watching for, and a breakthrough on that I think sets up all of these miners to go meaningfully higher, and looks to be a pretty important place, and they also play into the whole electric vehicle theme. So I want to cover off some of the ideas on breadth and then work through some of the industrial metal companies and show you how we could do that and give you an idea of some of the opportunities that I think are getting ready to hatch. So first of all, let's talk about the breadth. So one of the things we like to watch for is, are there more stocks advancing than declining? So on this chart I have the NASDAQ composite. I have the cumulative listing of the net advancers and decliners. Down here is the daily view, just in what the actual number is it positive or negative? And in the middle is a 2-week moving average. And as you can see, we've had a pretty bullish run since the beginning of November, basically the election ramp, and it is still working pretty well. So one of the things that we see here is the advanced decline line has surged a long way by any stretch. And the NASDAQ hasn't really broken out yet. And so we're seeing a rotation, and you've heard that name way too many times on TV. But what I want to point out is that when so many stocks are participating, it's very bullish. And if you look, since November, we've only had 3 days where there's been more decliners than advancers. Really hard to argue with that sort of trend in the market now. We had this back in June where we actually slammed high on June the 8th, and then we fell very quickly. That is definitely possible. I think more importantly, though, is that a lot of the things have rotated away from major tech. So while major tech has not broken out anything new to any new level of highs or whatever, we're seeing the rest of the market participate. And I think that's pretty helpful. So here are the advanced decline levels for the NASDAQ, or the high-low level for the NASDAQ. And we're having 180 stocks hit new highs today. That's just such a bullish level, and not one that we should interpret as a weak market. And again, we saw this in late 2019, where the market just had a very smooth climb, and we had up in the 200s for number of stocks hitting new highs. It was a very bullish scenario, and I feel like we're right there right now with this market. So when we go on to the next chart, so the first was the New York composite, the NASDAQ composite, and this chart is for the New York stock market. And what we see here is we're breaking through all-time highs on the stock market, and we're also breaking through all-time highs on the advanced decline line, and it's really showing a nice push. And again, the advanced decline issues on the New York stock market are a lot of the banks and a lot of the energy companies and that kind of stuff. I'll call it some of the old economy. It's just fine when those stocks work well. Now, again, our 2-week moving average here is really a nice solid push. But I think more importantly than the push is the breadth of the push, where so many companies are participating. And here we've had a few more days, one more day with a decline rather than an advancer, but we're still having very strong levels of advancement. So I don't want to argue too hard with the market here. It seems to want to go higher, and we don't have a good reason to fight it at all. And from the high-low data, we're up in the positive territory. We're up around 100 and we'll call it 200. That sort of push is very, very nice. Now, we're about to get to the point where for the New York Stock Exchange, we could hit the top of this trend line, which is, kind of the ceiling of the trend on to the upside. So maybe we pause there. The general data, though, suggests that we have so much positive momentum. It's very difficult to try and argue with how the market's behaving here. So this is still as of Monday's close, but what we see for the advanced decline percentage is we're pushing to new all-time highs. Obviously, Tuesday's price action was very good, so we'd be pushing up again. All of this just suggests that the market is well set up. Now, well, here's the mid caps, and you can see it's breaking out to new highs on its advanced decline. And then if we go to the small caps, this is shooting up here, and we're very close to breaking out to new all-time highs on the small cap advanced decline line. We've already broken out on price, so this is very, very bullish. Everything is set up to go higher, and without, I know there's lots of euphoria meters out there. We can outpace euphoria meters for a long time, so try not to get too hung up on that. Now, here is the Toronto advanced decline data. What we see here was we were in a big downtrend, and we finally broke out in early November. Usually when the Canadian stock market breaks out, I'll call it weaker. So when it breaks out, that's usually a pretty bullish sign. And we've also seen other markets around the world breaking out to new highs, like the India market and the Japanese market. So all of these things add up together to make a pretty good looking case for the market wanting to go higher. And again, nothing ever goes up in a straight line, but I think what you want to look for is opportunities on pullbacks rather than trying to argue with the trend. So the McClellan oscillator data, we have it here, and this is still for Monday. Should update shortly. I'm recording this Tuesday night. But what we see here, this is very bullish. It's above zero, positive, and the summation index is working higher. Now, one of the ways I like to use the summation index is moves below 400 usually create a market pullback. Well, we're just moving up, and away from that. So I have no reason to want to doubt this. We're definitely pushing higher here, and we have a lot of stocks doing it. So it doesn't really give us a reason to not participate. And here's the NASDAQ summation index. We're up here around 400, which is very heady and very bullish, and the market can easily climb with this level of a summation index. So it doesn't represent the same sort of area for the NASDAQ. When it's falling below 200 or even the zero level is when you start to get the declines, not so much like on the New York Composite. So here's my Schnell strength indicator, and on Friday of last week, it was sitting up here well above 75, and as long as it's above 75, you just want to try and be long the market, and when it pulls back below that, then at least you're aware that the market's in a pullback condition. You can either protect your portfolio or just stand aside for a bit, and then when you start to get the bounce off the bottom, and we had a nice early signal here where we had a nice Friday close telling us that things are working its way higher, and off we went, up and away. Looking in on the bullish percent indexes and the percent of stocks above the 200-day moving average, these are heady levels. We're up here at 70%. Now, some people are very quick to go back to January 2018 and say, yeah, when we got there, and we just immediately reversed. I think we're in this bigger picture. I think we're over here where the percentage of stocks above the 200-day moving average suggests we're going to have a very heady run in all of these cases where the stock market really goes on a rip. And I want to use the phrase, well, we could even go get it, is the New York stock market. Just go to whatever dollar Indu or something like that. And we're just going to go pick a time frame here. Select start and end, and I'm going to pick 1944 to 1947. And what I want to show you on this particular chart is that the stock market, so this was kind of the end of the war, and by November, this is when we signed the actual war agreement. But what you see here is as we broke out to higher highs, which we've recently done in the stock market, this continued to climb quite dramatically. And so from the August low, in this case, it was 160, and it went up. Well, you could use the first I'll call it run up without even so much as a pullback, to 206. And so that, is 45 on 160. That's a 25% move. This was really flying. And I would not be surprised to find out that with all of the pent up emotion from everybody, and as the vaccine gets released, that we have this positive euphoria and people are investing in companies because they think they're going to get better. And as the companies are getting better, obviously that pushes the market higher. So we have some names, obviously the big names that have run up a long way. And now these other names can do the same. So I don't know if we're sitting here at August or if we're actually sitting here in November. But I still will say we had a nice pullback in late October in our current market situation. And just, whatever, a 25% run from here would be crazy. Always seems like it. I'm sure they thought that back then too, because they were just getting home from the war. The economy was in shambles, and yet off this thing went on a big giant run. I think we're going to have some sort of big euphoria like that. And so when I see these bullish percent indexes up at very high levels, I don't get the feeling this is like 2018. And we also have huge Fed support, which we had in here in 2013-14. It was a very big uptrend. In 2009, coming off the lows, which I think arguably you could use that we're just doing that now. We had the March lows, and we ran all the way into March of the following year before we had big pullbacks. I mean, we had some wrinkles in there. If you go look at the day trading or the market activity during that period, it was very choppy, and many times you would have been scared. But I think the most important thing here is when you have these big bullish thrusts after big lows, and we were down 35%, this still could have lots of room to run on it long before it runs out of steam as people start to improve. And there's a lot of pessimism that we can't even get the vaccine distributed or whatever. I used to work with Thermo King, the transport refrigeration company. None of the issues that we hear talked about on TV to kind of add stress to our lives, that the vaccine might not be able to be distributed and all that. The US, North America, the developed world is very good at moving goods and services at cold temperature, room temperature, preventing it from overheating, be it electronics from freezing or too much heat in the summer. We have sushi that moves around the world at very, very cold temperatures so that it protects it, and it all happens in a timely fashion. I am extremely, I believe in a big way that all of this logistics issue will be no big deal. You've got huge fleets of refrigerated transportation, Prime, C.H. Robinson, UPS, FedEx, they all have chilled cargo trailers. Nestle ice cream, we've been hauling that around for a long time. So with that, you put these low temperatures in those types of refrigeration units, they're going to get to the destination very safely. So I'm more than comfortable that the whole distribution thing works out. And while on TV they're making it sound like it's a pretty big drama deal, all of these companies are used to moving freight easily. So I actually think we're on the front edge of a big bull market. We've literally just had our pullback October 30th, and now we're taking off to the upside. We're in the first 3 weeks of this, moving on to the fourth week, and we could run all the way to March. I don't have that as a date. I just say so far the data is very, very bullish. This is the highest level for the NASDAQ composite in going back to 2014 for the percentage of stocks above the 200-day moving average. Back then, we went a year before we had big market turmoil. This is really strong. And back here in 2009, we had the same sort of thing. And coming off the 2003 lows, we had the same thing. Now, again, we had a 35% drop in the stock market. This rates with these big ones of 50 and 60% that we saw earlier. So I don't have a magic view, but I will say that we're seeing the sort of price action and the momentum across the companies in the stock market that would suggest we're in a big heady bull market. Now, tech may sit on the side for a little while. It's going to come back as people start to level out their positions or whatever. But this chart, all of the things on the bottom here, all of the things in the middle here just say we're probably going higher. Now, when we look at the NASDAQ, only 60% of the top 100 stocks are on a buy signal. That sounds kind of bearish, but I think the most important thing here is 86% of the stocks are above their 200-day moving average and have been for, 2 months. So they've been on a heady run already. And yes, I agree that the NASDAQ leads the market. I'm just suggesting that there's a lot of opportunity to move into some of these other areas and catch the ride. And we've seen, while Apple's been flat or down 20%, we've seen these electric vehicle area of the market really move up dramatically. So the NASDAQ, while I would like to see it still continue its performance, it's okay to see rotation. And here's the New York Composite. What we see here, I thought I had saved this actually. So what I like to do is I have this green line that I set for current level. So it's at 76.89. So I just go down here and I always just have this set so my lime green line gets updated, and that shows me the current level. Well, we're up here during some of the biggest bull runs in the market, and we've just kind of entered up into this space. So do you really want to get short here and leave the market with such a positive backdrop? I think that's one of the big things to consider. And here's the percentage of stocks above the 200-day moving average. You got 87.63%. So I do the same thing down here. And I put a line across just to see how that compares. Well, as you can see, this is coming off the 2009 low and the 2003 low. That's the only two other times we've been up at these big heady levels. Does that sound like a place you want to start to short the market or worry about the market going higher? The position is extremely bullish right now, with everything being participating, with almost every stock and every sector participating in the big bull run here. So 87% of the stocks are up this high. Again, you're at such a high level that we don't normally see it other than in a big bull market. Now, here's the S&P 500, and of course that's always the bellwether. And what you see here is over 90% of the stocks are above their 200-day moving average, 90.98. Let's just change that up. And what you see, when we look at this level down here, 2003, 2004, this was pretty strong. 2009 coming off the lows, and we stayed up here almost till March of 2010. In 2011, we got back up here in early 2013. So these are more like initiation thrusts than they are bear markets. Now, we got here in February or March of 2007, and again, the stock market didn't top out till October. But we haven't been up at this level of bullishness since mid-2014. And then you might remember oil collapsed shortly thereafter, September, and that kind of caused some of the market to fall away. And we didn't top out until mid-September or mid-May 2015. All of these scenarios present, really high examples or really strong examples of conditions where the markets were set up to go higher. And I think I want to maintain that as much as possible. So hopefully that explains a little bit about why I would be bullish and try to give you, I'll call it some hard data rather than just saying, well, it feels extended. Yeah, it does feel extended, but in big bull markets, that's what it does for a long time. So here's the Toronto Stock Exchange. We're at 80% right now. We haven't been here since 2016, which was the start of the commodity bull run off the 2016 lows. In 2014, we spent 6 months up here before the September drop-off with oil, and then in 2009 and 2003. So all of these different cases make very good examples for the market to go higher. And again, the Toronto stock market isn't as broad or isn't as strong in various sectors. The U.S. market clearly is one of the strongest, but when even the weaker markets like Canada are participating to that same extent, that even enhances the bullish signal. So I want to make that very clear. So here's the bullish percent for energy. And just like that on the previous chart here, the middle area is the bullish percent. Now this was for the Toronto Stock Exchange. Well, this is just for energy stocks. So this is the bullish percent in here. And we saw it move steeply above its 20-day moving average. And one of the things I like to use this chart for is when everything goes above the 20-day moving average, you probably want to get on board. Well, energy stocks have been held up for a while, and I did a presentation on it, I think 2 weeks ago or something, just saying like these are starting to break out, get ready. Well, it's been a fantastic move to the upside in all of these cases, but it's still going on. And I think one of the bigger issues is, everybody feels like it's run too far. Dwight and I on the website run scans every day to try and find new setups. And there's really, really great stocks that are setting up. And I'll give you an example. Here's a uranium miner. Well, maybe we could, that's funny, Greg. Let's just go to the ticker cloud and put it in the right place. Okay, so here's EFR, and you can see this one's just starting to break out, and it's a nuclear-based idea. And then you can go to UUUU, and this one's just starting to break out. Same company, just the US ticker symbol. And then when we go look at Cameco, CCJ, US ticker, it's breaking out of this 2-month base and starting to push higher. Now, I own these two names, just got into them this week. I know the market started to run, but it still feels like there's lots of upside and there's nice setups here. So that's what's drawing me over into industrial metals to start to share those names with you. And if we just look at the price action intraday on all of these stocks, some were up 10%, and we can go all the way down to, very few of them were down, a couple of them, but some of these are also in, Silvercrest Metals, in Precious Metals and Silver Corp. These ones got hit hard because precious metals have been selling off. But these other names have been taking off to the upside. So if we just go and got an SCTR ranking and sorted them by that, right, we have some pretty nice charts out there. So we can even just go look in Freeport. That one's just $7.50 in April, and it's gone all the way to $22.50. Very smooth double. Here's Alcoa, almost a double from October. First Quantum Minerals. This one's a really nice company. It was call it $9 in early October. So when we go look at these names. Lots of upside opportunity. So let's just quickly clear out the numbers off the front of these. I want to show you how quick we do it, even when we're short of time here. I'm just going to go select all, and I want to remove the numbers from the front of them and say yes. And then I want to go back here to summary, and I want to sort them by scooter ranking, and so I don't really care about the intraday, but I'm just going to sort them based on which are the strongest stocks in the group. And then once we do that, we scroll to the bottom of the page, hit number in sorted order. That took us a whole 30 seconds or something to go sort these. Now we can go click on it, and we can go view all, and now we're in 10 per page and just scrolling through. So here's Freeport-McMoran, new 5-year highs, broke through this $20 level 2 weeks ago and is just starting on its way. This thing could run for 5 years based on the demand for copper, but this chart's just getting going, and we're seeing the overall stock market up 2 weeks in a row, and we think that it's been pretty heady. Yeah, well, we're breaking out of the consolidation from August to October and moving above that level now, and we're seeing all these stocks do the same. Here's Alcoa breaking the big giant downtrend 3 weeks ago, moving very nicely to the upside. First Quantum Minerals, 4 weeks now, broke to new 2-year highs. Actually, it might be just in here. So, breaking out to new 2-year highs, but the stock looks to be trending nice. Norsk Hydro, look at these three bullets off the end here. $3 to 4.50, moving up 50% in 3 weeks. That's pretty good start. And again, this is when the trade tariffs started. So now that those are behind us, COVID's behind us, these things have the opportunity to really scoot. And you can see Norsk Hydro was doing pretty well back here. Here's Ivanhoe Mines trying to break out above the September highs, just consolidating sideways. And any sort of move here could really make a big one. This chart here, Ferroglobe, just popping to the upside and pulled back. It's just at its breakout level here. That's a pretty good chart pattern there and gives you an opportunity even after it's pushed up a bit. Here's Southern Copper, clearly going higher. Chart looks nice. U.S. Silica Holdings, these were used for frac sand and whatever. This has suddenly moved from, $2.40 3 weeks ago to $5. It's up 100% in 4 weeks. Just breaking out to new 6-month highs or 9-month highs, and on its way breaking the big giant downtrend that we've seen. Looks very bullish. Century Aluminum starting to break out here, trying to get to new 2-year highs and really starting to climb. Teck Resources just about to climb out of here, and they sell cobalt, zinc, copper, coal, a whole bunch of stuff. Lundin Mining popped up to new 2-year highs here and looks like it's well on its way, ready to run. Vale just broke out this week to new 2-year highs. Big push up $1. These are big companies. This is nice to look at. Anglo American, huge commodity company, and they're breaking out above $15. That's new highs on the chart here, really big. South 32 has broken the 2-year downtrend and started turning up. Energy Fuels, I just covered that one off. Here's Impala Platinum trying to break through this $10 level, trying to push higher. We'll see if it can do that. Intrepid Potash, all the ag names are just starting to fire up. Mosaic, Nutrien, Bunge, Intrepid, like these are just starting to go here. Lots of room to the upside. Rio Tinto breaking out to new all-time highs and well above the 2019-2020 area. Just getting a big push this week. I think they're just starting out. Compass Materials breaking to new 2-year highs here. Looks like it's ready to fly. BHP Billiton starting to rock above all of the prior highs here. Looks good. Looking at Kaiser Aluminum, as Boeing starts to suck up a bit more aluminum, I think this will probably keep going. Chart looks good now. Here's Haynes International, big downtrend breaking above the 20-week or 40-week moving average and just starting to get going. Brigham Minerals downtrend, just breaking above the 40-week moving average now. Norsk Nickel, big downtrend here, just starting to break out. Looks really, really nice and attractive. Cameco, I mentioned this one earlier. Again, I'm in some of these. This is one of them I'm in. Aluminum Corp of China, this one's just starting to push here. Up for 3 weeks, breaking horizontal support and resistance. Looks pretty good. Constellium, pushing to the upside. EMX Royalty Corporation, this one's just consolidating, probably not my favorite. Hudbay Minerals, this is a beautiful chart. What a nice climb. Looks like it can go a lot higher. Lithium Americas consolidating a little bit. Looking in on Linus Corp, this one's breaking out to new all-time highs as we speak, so that looks pretty good. Nexa Resources, big downtrend, looks like it's trying to break it right now. Okay, so hopefully that gives you some ideas. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page. Thanks for taking the time to join me. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.